Says the below ground factors are not the relevant ones. It's more important is the above ground factors. How fast can we develop these resources? Which size can we develop? How many wells can we drill in which time? And that's now the second part. First of all, I want to look to some of the costs. Here is an estimate of the Deutsche Bank assessment in January 2013. They have estimated the break-even cost of different shale developments. It's the left arc in North America and far to the right are in Europe. These are by far the largest development costs of shale gas wells. They are probably partly deeper, so we need more lead times because of environmental restrictions. We need this cementation casings. This means a lot of investments. Let's go back to the next slide. Just a statement from Wood Mackenzie. The commercial viability of the UCAS shale resources is yet to be proven and will only be possible if the subsurface, which means the shale, is as good as the very best shale place in North America. And this is very improbable that will be the case. And now let's switch to the next one. This was a survey from the Center of Economic Studies in Mannheim among the industry. What do you expect is the break-even gas price which is being needed until it is profitable for the companies to drill to unconventional gas? They have a lot of estimates, but the mean is between 40 to 50 euro per megawatt hour, which is roughly twice the price would be needed as it is today. At present prices, it's highly uneconomic to develop shale gas plays. No, okay, let us go ahead. This is just a summary of that part. 40 to 50 euro per megawatt hour is the break-even price. Present prices are half of that about. Let's switch over. Now I will come to some production scenarios. First, a summary of the conventional gas production in Europe. These are the dark areas, which we already have seen before, and an extrapolation until 2030, which simply was made by the known fields, by the expected new discoveries, which we can to some extent extrapolate. And the light area, blue area, is the import, which is kept constant in that figure. And the upper line, the red upper line shows the demand, which is expected for Europe by the World Energy Outlook 2012 by the International Energy Agency. So the main conclusion of that figure is that domestic production is declining, demand probably will further rise. If we want to fill the gap, we need to increase the imports at an almost doubling. We almost have to double the imports. Okay, that's the production profiles I had, and here this dark arrow shows the difference which is needed for imports. The imports are rising. Maybe a bit too pessimistic, and the International Energy Agency has printed a more optimistic view. Let's in the next slide. So it's a dark line now, which is a bit more optimistic, as I said, but this is not the point. The point is we all agree that the domestic gas production is in decline and we need rising imports. And that's again the background for shale gas developments. But the International Energy Agency also has calculated the scenario, how much could shale gas contribute to the European gas supply. And this is just the difference between the dark and red line. It's at maximum about 20 billion cubic meters in around 2030, which means compared to the gas demand in Europe, it's about 2 to 3%. That's the production contribution which is expected from by the International Energy Agency in its World Energy Outlook, and these two dark arrows give the import needs which are needed. This last slide, okay? Once back. No, back please. Yeah, that one. Here you have the difference in our two estimates is larger than the difference in the shale gas contribution, and it's probably much more economic to make up the shale gas contribution just by use the gas more efficient by demand destruction in an efficient way. So the size of the possible shale gas contribution is too small to have an influence on prices and to change our overall dependency on gas. It's an illusion to believe that this will help in that field. And now let's go back to the detailed scenarios. This is again the figure from the World Energy Outlook by the International Energy Agency. The uppermost bar gives how much could shale gas or unconventional gas contribute in 2035 in the United States, and the lowest one is, and how much could it contribute in the European Union? It's much, much smaller. And this is no surprise. If you go to the next slide, if you show this, shows what is the population density and roughly speaking in Europe it's 10 times larger than in the United States. Here is the inverse population density, therefore it's smaller. And just to compare the infrastructure in the United States, we have about 400 or almost 500,000 wells which are drilled. Just in Germany we have about 500 wells, which is 1,000th of it. So this is similar to Europe. To most European countries, we have a much less developed infrastructure, so it would need much more investments, more time to develop that. And it's no surprise that it's not so much developed in Europe, because the resources are not there. Now let's go back to the next figure. And I just want to figure out how much wells would be needed just to fulfill the forecast of the International Energy Agency to produce 20 billion cubic meters. We took the example from the experience from the United States. What is the initial production rate per well in average? What is the decline rate in average? And then we made a scenario out of it. And this scenario assumes if each month would 65 new wells be drilled, which means about close to 800 wells per year. Just each year 800 wells per year. Then we could ramp up the production roughly in that size that it would contribute after almost 6 to 7 years to 2 to 3% to the European gas demand. Yeah. I speed up, yeah.
Give us a trend.
Yeah, this is the one scenario. Then if you drill in the same size further on, the next 5 years, again 500 wells per year, just next slide, then you see you will not increase the production anymore, because the decline is so steep. You have to drill just to keep the level. And as soon as you cannot drill in the same speed or with the lower productivities, production will decline. You have heard that this is already happening in the United States, and this certainly will happen in Europe as well. So let us summarize that. The production of 20 billion cubic meters in 2030 would amount to 2 to 3% of European gas demand. And this is a scenario of the World Energy Outlook, which I guess is more optimistic. The production of 20 billion cubic meters per year of shale gas would require 500 to 800 new wells per year, depending on how successful are these wells. And at present, we have about a bit more than 100 rigs operating in Europe. Most of them are drilling for oil, and about 30 to 40 are drilling for gas, which means to ramp up the production in that way, we do not have the infrastructure. We would need years to create that, and probably no industrial player would like to increase their drilling rig rate, because these need very prospective areas. So it's almost impossible to fulfill that. We would need 5 to 10 times more drilling activity. And finally, the European infrastructure is not adapted to such activities. We have to less educated staff, to few rigs, to less regional gas infrastructure, and so on. And I want to skip my 2 examples. This is one for Europe, this one for Poland. I want to skip that and go to the last summary slide. This was for Germany in detail. And so the summary. The conventional gas production is in steep decline in Europe. Gas companies expect rising gas prices unless they wouldn't try to explore shale gas. They would need rising gas prices. Europe is densely populated, oil and gas drilling activity is low compared to the United States. Drilling sites are very close to or in cultivated agricultural areas. This creates much more conflicts and much faster conflicts than in the United States, because you need to ramp up new wells, to develop new wells month by month. And then you have to come closer and closer to the inhabitants. But even if you do that, the contribution of domestic shale gas production to the European gas supply would be very small, in the range of a few percent. Domestic shale gas production will not have any influence on gas prices. Its influence is too small. The demand behavior is much more influential. And unconventional gas production in Europe will not solve any future European energy problem, supply problem. If some people hope that it's an illusion, this will not work. And finally, moreover, we should, the focus, it may, when we put our focus on the development of unconventional gas plays, it's an investment, I would say, in a dead-end technology. We should keep our attention to do that, to direct the investments in that direction which we need, which we know that we are running short of domestic fossil energy production resources, so we have to react in a proper way. Thank you.